Zeder is part of the PSG family of companies and focuses on investments in unlisted companies within the agricultural, food, beverages, food processing and related sectors. In April, Zeder reported a 62.3% jump in headline earnings per share in the year ending February, and Zeder has a price-to-earnings ratio of 8 and a market cap of 2.7 billion rand. Zeder seems to be the preferred play within the space.
Not for me, I'm afraid. It's really a agricultural hedge fund run by the boys from Stellenbosch.
Because it's got stakes in various sort of parts.
Yeah, but the key is that they levy themselves, that is the management company, which is the PSG thing, a 2% of assets per annum plus 10% of any profits. So it's like Pallinghurst and Reinet, which is, in my opinion, a total abomination on the market, because all they really are doing is leveraging an enormous gain for themselves every time the Pioneer share price goes up, because a significant part of the assets we're talking about here are the Pioneer assets and the Cape Vin assets. So, I mean, I know for some people the various bits and pieces of undervalued assets are of interest.
And Cape Vin is a good, sort of stake to have because it's not listed. So
yeah. No, and it's got all these other co-op, Oddby and Capespan and all the other old kind of co-op type businesses, but I'm not convinced. Maybe Tshepo can turn me around.
Because as I read that 8, I thought, no, this is Tshepo's stock. P of 8. This is one for you.
Yeah, I'll start with the bits that I don't like. I agree fully with Paul. It is the fees are 2 and 10 fees, where they get 2% on the annual market value, and I think it's 10% of the outperformance of the agricultural industry, as opposed to profits. But I think from that perspective, we don't like the fees. But what the PSG guys have done here is that they've levied themselves quite nice fees, but on a business that you can't quite easily replicate in the South African context. I think you
can't really get exposure to, because it's basically co-op as
you can't get this exposure in any other form on the JSE. I think this is a unique investment opportunity, and you're getting this at a very significant discount to what the business is actually worth. So whilst we don't like the fee structure, I think as an investment case we quite like it, and we'll talk to some of the numbers.
So please defend yourself and fall to what Tshepo has now said.
Look, the businesses they own that they give you access to, which we're supposed to be excited about, are smaller businesses similar to AFGRI, which a couple of minutes ago we were saying we didn't like. So I'm not entirely convinced, but remind me, what is in this Cape Vin thing? Because does that own stakes in some of the Distel and the wine and KWV type businesses?
Yeah.
Well, I don't like those either.
Paul doesn't like alcohol in general, from my understanding. I'm actually quite sure that he doesn't even like SAB Miller, stock that is very well loved on the JSE. Is that right, Paul?
No,
see, I know too much about you guys. I really do.
Alcohol is a terrible thing.
Okay.
I quite like my alcohol. So, look, again, I think one of the key differentiators with this business, and I guess with most of the businesses that are owned by the PSG stable, is you guaranteed a top management team that knows what they're doing across board. So you've got a management track record that is probably second to none in the South African environment, and they've structured this business and have opportunities here that are superb in my mind.